All right, thank you so much for coming back because we have another wonderful topic to talk about. Of course, you know I am Celeste Barr with eXp Realty, and I'm with Mike Rundell, and Mike is with Success Lending. And the conversation that we were going to just touch on is this. This is a kind of a, what would I call, a symptom of where we are in this market, which is the market is moving very fast and there is not a lot of inventory. And how does a buyer have funds to buy the next property if their money is in their home? So we were just discussing having a bridge loan, which is what it used to be called many, many moons ago. And now we're kind of talking about a HELOC, which is a home equity line of credit. Maybe Mike, you could just tell the concept of what is a bridge loan / HELOC.
So, where the background is in investment properties. A lot of investment people don't have the capital to be able to buy the next property, or maybe they have too much debt to be able to qualify for a traditional loan. So they've been using bridge loans, which are short-term loans that, can be interest only. It's expire in usually 12 months to 18 months. And then they've been getting into something called debt service coverage ratios. But these same companies now are expanding into the residential market. And, a lot of the offers that, realtors have to put in are non-contingent deals because they don't want deals to fall through. So these bridge loan companies are coming into the market and they are offering bridge loans as a second. A second loan is in the second position, which is often like a HELOC or a HE loan. It's a home equity product that you can get cash out of your home to use towards, the purchase of the next home. And we, are in conversations to start bringing this to all our EXP partners and to our customers at Success Lending to be able to find options for them to get their dream homes by using a bridge product, and then they can refinance later into that once they sell their home.
So I'm going to ask you this because I just want to follow through on this. I get a HELOC. I'm a client. I need a HELOC to buy the next home. And what is the timing on the back end of getting a HELOC? Am I restricted by having my first home under contract and closed in a short window of time? And what would that be?
So ultimately, the bridge loans can be 3 months, 6 months, 12 months. I mean, you can negotiate that term or even renegotiate that term as you go.
Okay.
A HELOC usually is, at least, for most of them, it's 10 years. So you don't have a problem on the front side. It's that bridge loan where you're going to be able to refinance that into a conventional loan. Usually you're going to have a 6 months onto that. You're going to buy your home and refinance that bridge loan into a traditional loan within 6 months.
Okay. So back up to this idea of why would someone use a HELOC instead of, and I know the answer, I'm just asking you because I want it to be plain and obvious to the people that are looking at this video. Why would I want a HELOC versus just simply refinancing my home and taking money out?
So, in this product, they're looking at trying to get you into your next home. When you put in an offer, if it's contingent on you selling your home, the person that is going to be selling it does not want that offer. They want a cash offer. They want an offer that's not going to potentially fall through. So ultimately, this isn't just a loan for the down payments. It's a bridge loan on the entire property. It's a cash loan. So it's more, it's not contingent on selling on the other home. And so it's going to be a loan that you can use to purchase that home that you want to buy. The HELOC is still going to be contingent. Because it's still on the other property.
Right. So. Okay. So we really are talking about a bridge loan. This is totally not a HELOC.
Well, it's going to be put in the second position, right? So it's going to be treated like a HELOC, but it's not a HELOC. It is a bridge loan.
Interesting.
Yeah.
Well, this is a good conversation because one, I didn't even know that they still had bridge loans or that they were still out there. Back in the late 60s, I know my folks had a bridge loan. when they were moving from one home to a different. But with that said, you know, that was a product that I thought had gone by the wayside.
Well, I mean, they're using it a lot for investment. So, you know, if you have, let's say, a bunch of properties in there, you can't qualify for a loan based upon your debt. You have, you know, all these mortgages. So you can get a bridge loan, like a fix and flip, where you can project what the home is going to be worth when you sell it, get an X amount, 80% of what the value is, and use that to fix up the home and either fix and flip it, where you sell it, or fix and hold it. And they've been using that in the investment industry. They just haven't been doing it in the residential,
Okay.
where it's, you know, your primary or secondary, just investment properties. So it's
And
kind
is
of, again, finding new ways in this tough market to be able to get deals done.
is a bridge loan considered an FHA loan?
No, it is a non-QM loan. It is a loan that does not fall under the FHA, Fannie Mae, Freddie Mac bylaws. It
And
does
for the
not fall under.
purpose of this business, this video, could you say what a QM is?
It's a qualified mortgage. There's certain parts of the mortgage that have to be there for it to be qualified, be insured and approved by Fannie Mae and Freddie Mac, which means it has to be, you know, no more than 30 years, which means it cannot be interest only. It has to be fully amortized. There's limitations on fees and some different things in there. A non-QM is a loan that's not governed by any of those principles. So it can be interest only. You can have balloon payments. The interest rates can be much higher and oftentimes are much higher than what you'll have. They're in general bad loans, but they're loans for people that can't get equity anywhere else.
Okay, okay.
So
Well, I think this has been another wonderful instructional video for the audience that hopefully there is someone out there that could use this information. So I thank you again, Mike, for your wisdom, your information. I don't know what else to add, but thank you so much. And
my pleasure.
if you like these videos, folks, please let us know, because there's a topic you want us to cover. You got to let us know. Give us a call. Our information will be in the description of our video. And until we see you next, I hope you're doing well, and we look forward to hearing from you. So thank you. Take care. Bye-bye.
Thank you for including me. Bye-bye.
You bet.